In this video, you are going to learn how to write off bad debts in QuickBooks Online. Bad debts are those part of accounts receivables and notes receivables that your business won't be able to collect on. Let's take this example. Darth Vader purchases a lightsaber from your business that is worth $100. The amount is payable in the next 30 days, but because his main business enterprise, which was the Death Star, went poof, and so he cannot pay you back. After 30 days, the accounts receivable becomes an aging receivable, and after 6 months, Darth Vader declares bankruptcy. So you are not going to be able to collect on that debt. Now you have two ways to write off this bad debt. Either you can go with the direct write-off method, which is simpler and easy to use, and then there's the allowance method, which is much more complex. So let's see the direct write-off method. You simply transfer the amount of bad debt from accounts receivable account to a bad debt expense account. But in QuickBooks Online, the process is a little bit more complicated because you have to create a bad debt expense account, you have to create a bad debt item, and then you have to apply a credit memo to the open invoice so that you can record that as a bad expense. Let's see how we can do this in QuickBooks Online. Step 1. Check for bad debt. You can do this by creating an accounts receivable aging report, which helps you see all of the overdue accounts receivables in your company file. First, go to the reports menu and select accounts receivable aging detail. Then note all the outstanding accounts receivable that you believe should be written off. Step 2. Create a bad debt expense account. A bad debt expense account is where you will be putting the money from the accounts receivable account so that you can record your bad debt expenses and track them in the software. Go to the settings menu, select chart of accounts, then click on new. Under account, in account type, select expenses, then bad debt as detail type. Name the account bad debts and click on save and close. Step 3. Create a bad debt item. Now this is a little more complex, so you will understand it a bit later why we are creating this item, but for now just follow along with this method. Go back to settings, then select products and services. Click on new, then non-inventory. Input bad debts as the name for the item, and under income account select bad debts, then click on save and close. Step 4. Create a credit memo to apply the bad debt to the invoice. Credit memos are generally used when you want to offer a customer credit in exchange for a refund or an exchanged item. But in this case, we are going to use the credit memos to apply our bad debt expense onto the accounts receivable. Go to new, then select credit memo. Select the customer for whom you are creating the bad debt expense. Then select product or service and select the bad debt item that we created in the step before. Now this is where the bad debt item comes into play. Because you want a placeholder in order to track these bad debt expenses, you use the bad debt item in order to do so. Input the amount to write off, then enter bad debt in the message. Once you have verified all the information, click on save and close. Step 5. Apply the credit memo to the invoice. Now this is quite easy. You can go to the new menu, select customers, then receive payment. Select a customer, then select the invoice under the outstanding transaction section. In the credit section, select the credit memo that you created to apply the bad debt, then click on save and close. And you can easily check the impact of writing off these bad debts in both the balance sheet and the income statement of your